Asia-Pacific stocks stumbled today as optimism over U.S. interest rate cuts began to fade, and tech investors pulled back ahead of Nvidia's highly anticipated earnings. From Tokyo to Sydney, markets are feeling the pressure, and political drama in Washington isn't helping. Let's break down what's driving the sell-off. I'm host Name. Here's the market snapshot you need.
On Tuesday, most major Asian indexes traded in the red. Japan's Nikkei 225 and Topix dropped about 0.9% each. South Korea's Kospi shed 1%. Hong Kong's Seng fell 0.2% after recently hitting a near 4-year high. And Australia's ASX 200 slipped 0.6%, weighed down by mining losses. The pullback comes as Wall Street futures dipped overnight. The trigger? Washington turmoil after President Trump's abrupt firing of Federal Reserve Governor Lisa Cook. Investors worry politics might complicate the Fed's path to rate cuts, dulling hopes for easier policy. That uncertainty is filtering through to Asian markets today. Let's look at regional exceptions and where risk is concentrated. China bucked the trend, holding near multi-year highs. The CSI 300 rose 0.1%, trading close to its best level in 3 years. Beijing's hopes for fresh stimulus and support for domestic tech and semiconductors are fueling the rally. Chinese chip makers and local tech firms are front and center as policy favors domestic supply chains. But watch for how China balances support while scrutinizing foreign technology, including Nvidia-related products. Across Asia, tech stocks bore the brunt of selling pressure. In Japan, Advantest slipped about 1%, a key supplier linked to Nvidia's supply chain. SoftBank, a major Nvidia investor, fell roughly 2.5%. In South Korea, Samsung Electronics and SK Hynix declined between 0.4% and 2%. Taiwan's TSMC was largely flat in Taipei trade. All eyes are on Nvidia's earnings due Wednesday, a bellwether for AI and chip demand. Any sign of weakness or headwinds from China could ripple through global tech stocks. Investors are positioning for volatility, trimming exposure ahead of the report. Expect moves in chip suppliers, cloud names, and AI plays depending on guidance. With sentiment fragile, Nvidia's results could decide whether the tech sell-off continues or reverses. One notable loser was Nissan Motor Company, with shares plunging roughly 6%. The move followed Mercedes-Benz announcing plans to sell its $346 million stake in the automaker. That news added to caution in Tokyo markets today. In Australia, mining giants weighed on the ASX after weak results from Fortescue Metals. BHP and Rio Tinto also slipped amid the pullback. On the flip side, Coles Group jumped over 8%, while Woolworths rose about 2.4% ahead of earnings. Meanwhile, in India, the Nifty 50 fell about 0.7%. Investors are bracing for looming U.S. tariffs on some imports, a risk for energy and trade flows. Looking ahead, Nvidia's earnings, oil price moves, and the political uncertainty around the Fed are the key things to watch.
So, to recap, Asia's rally hit a wall today, with tech stocks retreating ahead of Nvidia's big reveal, while politics and tariffs add another layer of uncertainty. Do you think Nvidia will calm markets? Drop your thoughts below and subscribe for more daily breakdowns.